Thank you for joining me. I'm Alex, and I want to talk about SunPower today. What they do is SunPower, and they're ironically one of the very few renewable energy companies that I probably wouldn't recommend you buy. Reasons below, but in a vacuum, the numbers actually sound pretty decent. Price is $22.18, which gives them a market cap of $3.8 billion. There's no dividend, and as is common for new companies, there probably won't be one for quite a while. Revenue $1.9 billion, which is up 10%-ish. Earnings $22 million, which is up from negative $811 million, which is huge. And that gives them a PE of 190 with a forward PE of 51. Forward PE of 51, not terrible, especially if they can actually hit it. That would kind of quadruple their earnings, but kind of still not great. Total assets $2.2 billion, total liabilities $2.2 billion, which gives them a total stockholders' equity of $10 million. Again, up from negative $209 million, which is huge. Definitely a step in the right direction, and no risk factors that I can really see. Market is growing significantly, and I don't see that changing pretty much regardless of how many other companies enter the market. Why I wouldn't recommend this company is revenue is up 10% in a hugely growing market, and that is kind of a problem for me. Also, this is a snapshot, and the revenue is actually still down from a couple years ago. I don't really think that anyone operating in this sector should ever have declining revenues. It's just all growing so significantly that anyone not growing is doing something terribly wrong, and that's kind of why I wouldn't recommend this stock. So for a growth investor, I think especially in the sector, the growth is just not significant enough. I kind of would pick something else. Something I've done recently is your renewable energy group. I think that would be a far better buy. For a dividend investor, obviously there's nothing here. And for a value investor, the balance sheet looks absolutely terrible. The PE looks absolutely terrible. The growth is meh. And there's no dividend. So overall, I don't think a value investor should really be interested in a company like this. I definitely think that this should be revisited after they release the next year's earnings and see where things are then, and maybe go from there. Might have to wait a couple years though. I don't think that even with a forward PE, even if they hit the forward PE of 51, this probably wouldn't be a buy for me. That's it for me for today. If you like this video, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.